Who in the world is mining Bitcoin in Australia right now? I mean,
I don't like a company going bankrupt, but whenever something like this happens, you can go into Pacer, find the court filings, and then you have all this juicy open source information about who is involved in these things. Some of the names that have surfaced from this, there's some really weird stuff in here. Like, for instance, is the Chicago Blackhawks hockey team? This is real for $1.26 million.
at first blush, might be like, well, yeah, of course, just, check the boxes. But if
just
you
log
are,
the trade, bro.
Yeah, just log the trade. That's not how it works.
Now, this is very much a he said, she said story.
Riddled with drama.
What's going on, y'all? Welcome back to Blockspace Live. Hope everyone had a wonderful 4th of July weekend. And we are coming back swinging with a lot of news to kick off this Monday. We're going to lead with TeraWulf signing a $19 billion deal with Anthropic for a data center in Hawesville, Kentucky. Following that, another Anthropic story where the premier LLM designer is looking for 1.4 gigawatts in Australia, and why IREN might be under the scope of this search, but may not be the principal actor. We also have Jay Patel of Lygos Finance on to talk about what else but strategy selling $200 million worth of Bitcoin and what this means for market sentiment with Bitcoin and faith in the strategy capital stack. We will end on a note of Keel Infrastructure hiring a new president from a real estate investment trust company for data centers, one of the largest in the world, as it searches for 2.2 gigawatts worth of AI workloads.
Blockspace goes live weekdays at 1 p.m. Eastern, featuring quick hits on the latest in data centers, AI, Bitcoin mining, markets, and emerging tech. Make sure to like and hit subscribe. If you're watching on YouTube, click the bell to get the push notification to your mobile device. This turns into a podcast after the live stream runs its course. You can find that wherever podcasts are found. And if you like what you hear, you'll love our newsletter. It comes out daily, delivered straight to your inbox, summarizes everything we talk about here and more. This show is brought to you by CleanSpark, Nasdaq listed, ticker CLSK. More on CleanSpark later on in the show. Let's kick it off, Colin. We had a nice patriotic weekend, 250, and to celebrate, the markets are ripping this morning, or at least the markets I'm paying attention to.
I mean, yeah, a lot of the stocks in our orbit are up. The melt up continues. Everyone get in here lest you lose out on more opportunity as you dollar cost average into Bitcoin. Jokes aside, though, it seems like the deal flow came back in this morning.
Yeah.
And the biggest one that we flagged for the show today is TeraWulf's deal with Anthropic for its Hawesville, Kentucky site. This is coming at us after a lull in the deal flow for a lot of these NeoCloud and powered shell operators that formerly were Bitcoin miners. And the TeraWulf news also comes with an appended news item where it is shedding its JV with FluidStack. And we will get to that in a second, because I think that is honestly, in some senses, the more interesting news here, couched in the
very, very interesting. What's going on there?
So let's go ahead and get this up on the screen here. TeraWulf signs 20-year Anthropic lease for 401 megawatts at Kentucky data center campus sells Abernathy stake for $530 million. So the details of the Anthropic deal to start off: 401 megawatts of critical IT load, $19 billion contracted over 20 years with 2 5-year renewal options, and payments expected to be supported by investment grade credit. The delivery for this site, the initial capacity is expected to come online sometime in the second half of 2027, with the full 401 megawatts by early 2028. Big deal for TeraWulf here, obviously. Signing Anthropic, one of the premier frontier LLM designers out there next to OpenAI, and really cements them, I think, as one of the front runners in this transition from Bitcoin mining to AI data centers, if they weren't already in that consideration. But interestingly enough, as the end of this headline suggests, this news also came with TeraWulf selling its stake in its Abernathy joint venture with FluidStack. So this Abernathy, Texas site that TeraWulf was now building in a joint venture with FluidStack will now be sold back to FluidStack, their equity stake, for $530 million. TeraWulf is advertising this as a premium about 18% over $450 million in investment made on the site. And the transaction for $530 million will be payable in 3 installments. The first, $250 million within 14 days following the execution of the purchase agreement, approximately $130 million on or before December 31st, or $150 million, on or before December 31st, 2026, and approximately $130 million subject to certain adjustments on or before April 30th, 2027. I thought this was really interesting, Charlie, because you can read this in one of two ways. A few ways. Now that TeraWulf is signing this deal with Anthropic, I think it does raise the question, why would you bother with a JV where the contractual value is actually much less? I'll pull up figures for that here in a second once I toss it to you. Especially considering it's all the way in Texas. I know geographic distances are not exactly the biggest challenge for these companies, given the rate of travel today. You know, all of these executives surely enjoy private jet clauses in their comp packages. But the fact of the matter is, you've got your flagship in upstate New York, or in New York, and then you've got this Hawesville, Kentucky site. Why not just keep most of the operations on the East Coast, especially when you can fully own these and not be subject to this JV with FluidStack? Also, if the terms of the deal hold, they made, decent amount of money on it from what they put in. And as I understand it, this was not made clear within the press release or the SEC filings for the press release, but the convertible notes that were taken out for this data center were wrapped up in the JV. So I would assume TeraWulf deleverages that and then unburdens himself from that debt obligation. And yeah, it seems to me to be a kind of logical play in the sense that maybe they're giving up some optionality by getting rid of this JV, but now they can just focus on their fully owned powered shells and continue to build deal flow there. So
yeah, so this contracted revenue about doubles WULF's contracted revenue, which is pretty significant. I was kind of looking through I was looking through how TeraWulf was talking about this, and maybe you have some insight this column that I don't, but the credit side seems pretty interesting. They say investment grade credit, but Anthropic is a private frontier lab. As far as I'm aware, they're not investment grade credit. So whose credit is this? Previously FluidStack with Google was backstopping that. Who's backstopping the $19 billion of investment grade credit for Anthropic or TeraWulf?
So I think this is TeraWulf themselves, because they have a double B minus from the S&P Global.
Okay, so this
and a
is
subsidiary, Wolf Compute LLC, actually holds a double B rating from Fitch and a double B from Moody's as well. And this is actually important for the Australia story later on, because that was one of Anthropic stipulations in this hunt for 1.4 gigawatts down under, that they need investment grade credit because, like you said, they're not public and they don't actually have any credit ratings out to mention, especially not investment grade. So
gotcha. Well, TeraWulf stock up nicely on the news, up 10% on the day. At 1% at one time, I think it was up 20% right at market open. The investors like this news. I will say, Colin knows we like look and these big guys have large sites scattered across the country. And you think of the speed at which they develop these, it might make a little more sense to concentrate regionally, not just within a specific country. So, I mean, I know you like a good oil and gas analogy. You see this with oil field service operators. You see this with Halliburton, Baker Hughes. There's specific parts of the country, specific regions that they have like their yard in, that they send trucks out, and you see this with how producers acquire leases. So I wouldn't be surprised if, because this is an infrastructure and logistics heavy industry, especially during build out, that these are something that you can't have 3 projects on, east, west coast, and central USA. If you're gonna, that's a lot of plane flights. It's a lot of highways. Makes sense to think about regional focus. So,
yeah, I agree with that. I think keeping it to the East Coast probably helps simplify a lot of those logistic kinks that they might go through. And going back to the TeraWulf deal with Fluid Stack, it was $9.5 billion for the entire contract, of which TeraWulf had 51% stake, so roughly $4.75 billion over 25 years. And so if you look at that versus the Anthropic deal, you would probably rather focus on the one that's going to bring you 19 billion over 20 years and not have to deal with the joint venture structure. So we'll be keeping an eye on this, hoping to get the TeraWulf team on the show later this week to discuss the deal and also the decision to sell Abernathy's stake. But for now, we'll table that and move along.
Yeah, we got Jay Patel again in the wings. Going to bring him back up here and talk. Guess what? Micro strategy in selling Bitcoin, 2 phrases you didn't think you'd hear in the same sentence a couple years ago. But before we bring on Jay, a word from our sponsor, CleanSpark.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at CleanSpark.com.
If Bitcoin's actually the best money and it's the thing that people should accumulate and it's the best risk-adjusted asset, I lose zero sleep about whether or not that's going to happen. I just ask the question of when.
Is Liberty matrix math that you're running on large pieces of data.
The Bitcoin miners can absorb that energy.
And in many ways, this feels like a second bite at the apple to build a new internet.
All right, let's bring up Jay. Jay, welcome to the show.
How you guys doing?
Great. So, Sailor sold, not 30 million this time, 216 million, 3,588 Bitcoin to, quote, fund dividends for our digital credit securities. It feels like I feel a bit of a relief, honestly, seeing this. It feels like finally pulling that tooth, just ripping the Band-Aid off. What's your take?
Yeah, when we spoke earlier, I think it was right at or before market open when the announcement happened. And my initial read when Bitcoin sold off, I don't know if MicroStrategy shares were trading down, but my initial read was maybe the market is seeing this as, oh, we thought he sold more than he did. And if they only sold 200 million, maybe that's actually more price impact than we anticipated. I think it was actually not as, I was thinking about it too much. I think it was in reality, people were selling off on the news that, oh my God, Strategy sold 200 million, but it's actually like a good testament. They can sell 200 million of Bitcoin they're not known for the best execution, but it must have been decent because they sold 200 million without moving the market too much. And obviously now, Bitcoin price and common stock is back up.
Yeah, because they managed to buy Bitcoin, a little bit of Bitcoin higher, and then they sold Bitcoin. It's like when Saylor's pitching that, we're gonna be managing the digital credit, and his track record is the most hilariously like poor execution. You gotta wonder, like, is he making the right decisions? Looks like Strategy's up today. MSTR up 3-4%. Okay,
And
Jay. So strategy has, I believe, they can sell up to 1.2 something billion. Should they sell all of it? Are they just like dipping their toe in the water?
I don't think they need to sell all of it. I think, a week ago I was of the view that like they should just rip the Band-Aid, sell $1 billion of Bitcoin, and then you don't have to worry about the pressure on the prefs and the common. But honestly, now that they've sold and it seems like the market has digested that a little, I think, if he's proved that he can sell a meaningful amount of Bitcoin and they can get liquidity, I think that says a lot more than the actual liquidity, because now they have a decent reserve for the pref dividends. I actually think like the big mistake in all of this was like, honestly, in retrospect, like the 32 Bitcoin that they sold way back when didn't really inoculate the market to anything, because you're not telling the market much with, we can sell 32 Bitcoin. Like 32 Bitcoin is not that much. But like being able to tell the market you can sell, $200 million of Bitcoin, I think that's more meaningful. So I think from that perspective, I don't see near-term pressure to sell. One thing that I do think in hindsight now on the announcement last week that maybe was a mistake is like they limited themselves in that language with the 1.25 billion authorization, where now they have to get board approval for further selling beyond that threshold. And honestly, like, I think I'm of your opinion, which is like Saylor should just embrace, like, they're doing an actively managed strategy now. They will buy and sell as they see fit to the amounts that they see fit. It's not like, if you're an MSTR shareholder, presumably you believe in Saylor's ability to, do the financial alchemy that he does. Otherwise you wouldn't be on board. So I don't see like a governance issue from that perspective, but yeah.
So Stretch is also up today at 3.7%. It's at $91.09. So still a little bit under par at 100. Strategy also up. Now Strategy has a cash reserve for its dividends and debt obligations just north of 2.75 billion. Jay, do you think that this sell gets them out of the woods, or do you think there's still more that needs to be done to restore confidence in this capital stack and in this flywheel of digital credit and common stock?
I think the real sign, I wouldn't say they're out of the woods yet, but I think the real sign will be, let's see, we have a slight run up in price. How does the company respond? I'm still not the biggest fan of how they're willing to dilute the common shareholders. But on the other side, it's obviously like they've got this cash reserve. They had a cash reserve, 6 months ago. What do they need to show you so that you can trust that they're not going to burn that cash reserve? They could retire some of the prefs. Maybe they could buy back some of the bonds that are trading at a discount. Obviously, the market didn't love that the first time around. But I think you probably need a little more time to just make sure that they're exercising some caution with the cash reserve. I hope Saylor's not trigger happy again and decides, what? Great opportunity to retire a bunch of prefs and cut down back to 6 months of dividend reserves, and then we're back in the cycle again. I doubt that will happen. But I honestly don't think that there's probably much more of a solution than just time, unless they codify more of this. But I actually think that's a bad idea. Like I do think that for them, having flexibility is important.
Yeah, maybe one thing to restore confidence is not buying the top and selling the bottom, but we'll leave that for another market cycle, I guess.
I got one last question on Saylor and strategy. This tweet you said might be interesting. You need to view everything that strategy is doing under the lens of trying to get into the S&P 500, selling 3,588 Bitcoin is one of those things. This is solely to satisfy the S&P Global, and something they said they would do in the earnings call. Jay, do you agree with this or qualify it?
I don't agree that this is the only reason that they sold. Obviously, they sold to alleviate some of the pressure on the prefs, take some pressure off the capital stack. But I do think this is an interesting angle, which is like, if you remember a couple quarters ago, the whole conversation was they're going to vote in, I don't know exactly how the S&P committee works, but they're going to make a decision about inclusion, and there was so much pressure to include them and they didn't get included. And it's like, we forget that like that was even a story. But for a while, the conversation was basically like, how is MicroStrategy not in the S&P 500? You know, they've made quote unquote profit for the last couple of quarters at that point. So I think they are trying to work back towards that. And obviously like inclusion in the index would be huge for them. I do think though, that based on everything that's happened over the past couple of weeks, it will be a steep hill to climb. Like, I don't think that getting back to, you know, September, October kind of situation will be enough for them to get in the index. But I think maybe their willingness to show more active management, protecting the capital structure will.
I guess my question with this, and I don't know if you have an answer to it, did the S&P 500 board come out and specifically say that they weren't going to add them because they're not selling Bitcoin, or is the more idea that they just want to see more cash flow? I don't really quite.
I think the big inclusion criteria that they were missing for a long time, which they had, you know, finally gotten to the point where I guess they were going to be included last year, was I don't think it's cash flow positive. I think it's just you know, showing a GAAP profit. So, you know, to some extent, I guess being able to sell some Bitcoin. Although I guess you'd have to manage the cost basis a little better. I don't know if buying high and selling low is the best strategy for generating profits.
So let's switch gears. Enough about strategy. Let's talk about the other thing everybody wants to talk about, which is memory stocks. In particular, South Korea. And if you've been living under a rock, South Korea has gone bananas for memory stocks. And we have this headline here: Samsung's profit in 2026 will exceed its cumulative profit generated over the past 40 years. What in the world? And if you're not familiar, Samsung and a handful of companies like it are basically the Korean economy. So, Jay, given this, you think South Korea will be interesting over the next 2 years. Why?
So I won't claim to be, you know, a semi-analyst or anything like that, but I do trust all of the, you know, pretty good reporting about the fact that it's going to be at least 24 months before memory production ramps up enough to kind of satisfy demand. And I know there was some news, and we might have talked about it last week, with Apple trying to get the ability to buy, you know, consumer memory from China. CXMT, I believe, is the company. And I think they just listed their shares. But I think this is interesting, just because if you think about the Korean economy, first of all, like, you know, as Bitcoiners, we know they are a degenerate bunch, at least when it comes to speculation on assets.
They loved speculating on crypto.
Yeah.
The crypto tickers in South Korea are just bonkers, and they traded a premium because of funny, you know, financial.
Yeah. So if you think about, like, what's crazy is, so Samsung and SK Hynix this year will produce tax receipts for the government in excess of the total tax receipts that were anticipated for the entirety of 2026. So imagine like two companies are bringing in more revenue for the federal government than they anticipated in its entirety for the year. So I think there's one side of things, which is just like the scale. Like, you know, we in the US, obviously the AI boom is big, but the US economy is massive. So like the proportional impact doesn't feel as crazy. If you're looking at the numbers for these few companies, like the fact that, you know, there's a number of domestic levered single stock ETFs for SK Hynix and Samsung that are 90% retail. I think margin lending in South Korea and in Taiwan is at all-time highs. There was a story in Bloomberg about primarily retail brokerages going to get extra capital, like looking for capital because they can't satisfy all the margin loans their retail platform users want to take out to buy more equity. So there's a bunch of demand to buy these stocks. I guess on the other side, they do produce a lot of profit. And, you know, obviously the government is making a lot of money. The employees are making a lot. I think I saw a stat that the average Hynix employee will have like a $450,000 bonus. So I, you know, from my perspective, I'm just thinking as like a Bitcoiner, like there's going to be country that's basically flush with cash, but I think they understand that this is not like a permanent phenomenon. So what do they do? Do they establish a Bitcoin reserve? Do they establish some sort of sovereign wealth fund? You got to think about there's probably a bunch of other effects that this has. Leaving the technology side aside, just like there's got to be some inflationary effects if you're incredibly levered population is also getting massive payouts from these companies, and it's temporary. How do you manage that?
Yeah, and what systemic risks does it introduce when two companies are the lion's share of your taxes and have outstripped what you thought you would just earn from the entire economy as a whole? And especially when you consider that your population is taking out loans to invest in these companies. I mean, it seems like if you were looking for a near to the top signal for the AI bubble, this would be one of the things that you would put at the top of the list.
Yeah, for sure. The only thing I'll say is obviously it does seem like the memory supply constraint will last for some amount of time. I know, there's efforts to prop up Micron in terms of, them bringing more domestic capacity in the US, and maybe that happens, but that takes time. But yeah, I agree with you. The retail leverage exposure is really the scary part. Like, governments aren't great fiscally, but I think they can manage. Governments will figure out how to spend money. I don't think that will ever be an issue. But yeah, when the come down happens and your population is invested primarily in two companies, what happens then? I think it'll be interesting. And the divergence from the other Asian economies. Japan is going through somewhat of an opposite struggle right now, where the currency is weakening. They're trying to promote growth, and they can't figure out a really good strategy for it. So, I think that whole side of the world is going to be very interesting over the next couple of years.
And I do wonder what the South Korean penchant for gambling will do when a bunch of folks in South Korea airdropped up to $450,000 in bonuses this year. You saw what it did for $1,500 in the US a few years back with the crypto boom. I don't know. Last thoughts, what happens when memory eventually rolls over, and if South Korea, maybe they haven't done enough to prepare for that almost inevitable event. But
the way I'm
on the other
thinking
side of
about
not
it
doing
is,
it?
Imagine, it's almost like if you're Dubai in the 1980s, but you're speed running the 40-year arc of depleting your oil reserves in 2 or 3 years. I don't know what domestic industry you can build that will match up to Samsung producing 40 years of profits in a single year. But I imagine that part of the dilemma, the part of the situation the government is in this year is what do we do with all this cash in terms of, I don't know, is it seeding their own frontier labs or other investments in the AI economy that can kind of outlast memory, which I know people say is a commodity, but you made the point that it's really only 3 companies that produce it. I don't know if they can build much of a tourism economy like the Middle East has that quickly, though.
I'd much rather look. Dubai is way too hot, man. I cannot imagine that Seoul is as hot, and I prefer Asian food. So, would love a tourism economy. Jay, thank you so much for coming on Blockspace. Appreciate your insight and takes. Maybe this sailor cell will, portend a reversal. We'll see. Thank you so much for your time. Adios. All right, we're going to keep on rolling. We are going to talk about Anthropic rumors. Going to Australia, is IREN on the list? And the Keel Infrastructure new CEO, what is behind that appointment? Before we go to the next segment, a word from our sponsor, Luxor.
This episode is brought to you by Luxor's Commander, Bitcoin miner management software for enterprise operations. Commander gives you real-time fleet monitoring, bulk remote commands across your fleet, and Intelligent Miner. That's an automated profitability engine that runs every 5 minutes and tests your fleet's power settings against live hash rate markets and live energy markets. ERCOT backtests show 10% improved profitability with intelligent mining versus binary mining. Commander Pro is $100 per megawatt or a 25 basis point pool fee adder, roughly half the cost of competition, and you can try it free for 60 days. So if you want to learn more, go to luxor.tech/commander to get started.
All right, Charlie.
Let's go to the rumor mill.
Go
Right, let's go to the rumor mill.
So this, this story really puts into perspective something that we've been covering on here for a minute, which is this shift away from the US to other markets for AI. I don't want to say it's a shift away from the US, but a lot of these companies are starting to look to where they can put roots down internationally. And it seems like Australia is emerging as one of the premier locations for these AI data centers. This is coming at us from the Australian Financial Review. The headline here, Anthropic's plans to buy 1.4 gigawatts of Aussie data center capacity. From the heading, or from the lead paragraph, the world's most valuable artificial intelligence company, Anthropic, wants to buy at least 1.4 gigawatts of capacity from Australia data centers that will cost as much as $15 billion US to build, far exceeding previous estimates of its needs. According to this scoop here from the Financial Review, Anthropic has zeroed in on 5 companies here. CDC Data Centers, 6. Next DC, IREN, and Stack, among other players, but those were the ones that were named in the article. And they sent a round of proposals to these companies in March with an 11-point checklist for what they are looking for in terms of a data center partner for the Outback state. Now, principal among these, as we talked about with the TeraWulf news, Charlie, is creditworthiness. Anthropic came out and said very bluntly, we need investment grade credit to make sure that these builds will actually be financed at good rates and delivered on time. The other big checklist item that was kind of at the top of the list is Anthropic. I'm quoting here directly from the article. Anthropic asked for one-page summaries on every Australian data center that company has built to date exceeding 200 megawatts. So far, the only company on this list that checks both of those critical checklist points is CDC Data Centers. They have built 200 plus megawatts in Sydney, I believe. And they also have investment grade credit. They're rated at they're rated at B, and with Moody's first public investment grade rating for them in April 2026. IREN is not rated at investment grade credit, and they also have not built a 200 megawatt data center in Australia. Now, they have announced an 800 megawatt site in Bundy, Australia, expected to cost $10 billion. And that was announced in June. And I can't help but wonder, Charlie, I'm going to piss off a lot of the IREN fanboys here, the IREN iguanas, if that's a little too late in the sense that they got the ball rolling. No doubt they might get a piece of this. The article stated that Anthropic has loosely made a decision to probably tap 4 or 5 developers for this so they can spread out their chips and not concentrate all on one bet. But 800 megawatts, a lot. They might get all of that filled from Anthropic. Maybe they don't. But they announced this in June, which is, obviously a few months after this checklist and this proposal was sent from Anthropic to all of these companies. And I do wonder how much the fact that they actually haven't built anything in Australia yet will count against them. And the investment grade credit piece sounds like it could be a deal breaker, at least for them getting the lion's share of this. According to the sources that spoke to the review in this article, Infratil-owned CDC Center, it's a subsidiary of Infratil, is expected to come out with the lion's share at about 500 megawatts, sources said. So IREN's not out of the running for this at all, and they will likely be tapped for this, I would imagine. In fact, I would be shocked if they weren't, considering they have started building this 800 megawatt site in Bundy. But it doesn't seem like they will end up winning the majority of the contract here. Charlie, your take.
So, I'll steel man it a bit. IREN is on the short list. They're a speed and greenfield speed bid, and they are Australian. I mean, listen to their calls. Dan's got that very heavy Aussie accent. They are not the investment grade that I'm aware that the CDC is, and they don't have operations at scale in Australia. So yeah, we'll have to see. There's some other
Actually, I need to fact check myself here. IREN does have investment grade
they
credit
do
of BBB.
Oh,
from both Fitch and S&P Global.
Okay,
my first swipe at that.
Okay,
we're
gonna get a biz rated for that.
Your LLMs, everyone. But yeah, so they are investment grade rating. But so I would imagine they're probably one of the lead developers in this search for Anthropic, because from what I could see from the other ones, some of them are private. They don't have investment grade credit ratings, but there still is that 200 megawatt data center build in Australia piece that they're missing.
Yeah. So they do have multiple gigawatts. Is it 5 that I saw? That 5?
That's what they have under development currently.
Yeah. So I mean, that's significant, and they are obligated to give NVIDIA 5 over the next some odd years. So they, depends on, like, we'll have to see where these break down. And some more color on this is apparently, I didn't know this, Dario Amodei, Anthropic CEO, met with the Australian treasurer Jim Chalmers in April, and there might be a little bit of tension on Anthropic in the from the context of the Mythos model. So, as you know, they yanked Mythos in the United States, but the US has export controls on this model, and they may not have been observing these export controls to Australia. Now, Australia, moderately close US ally, but it's kind of interesting how we have weird, IP intelligence export controls. And if we're talking about a US company having a major data center and inference or training in a different country, and we now have export controls, this is something we should probably be watching very closely and covering as intelligence becomes issues of national security. So even though it's in a similar Western style nation, historically close ally and member of the Five Eyes, if you will, Australia eyes on the intelligence clampdown, specifically highlighted by Mythos. So there's some.
Will Fable 5 and Mythos now be available to international users, or is it just the US with the read rollout? Do you know?
So if I'm not mistaken, Anthropic has specific corporate and national partners that they've got Mythos running with, but they're kind of it's permissioned. And then they have the neutered, they had Fable V1, which is neutered, and then they have now currently available Fable V2, which is further neutered. Still an incredible model. Been using it all weekend. I think it's actually a little unclear and fuzzy exactly how permissioned Mythos itself is among the corporate partners that Anthropic has. This is on the heat. This is we are looking at OpenAI and GPT 5.6, Luna, Terra, and Sol coming out here very soon, imminently, with they would claim Mythos comparable power. So those are a bit caught up in the national security conversation. I just don't see how this remains a defensible national security moat, especially when 6 months from now, 12 months from now, the open Chinese models will be here. So we'll have to see. We have this kind of inevitability of free information, free intel and open intelligence timeline behind us. So we'll just have to see how this plays out. I managed to co-opt this story about Anthropic and IREN news into one about Mythos.
Well, it's definitely in the shadows of this is the whole
Yeah.
Mythos debacle, and a lot of questions being raised about how much Anthropic will have to bend the knee to Uncle Sam, especially as you said, Charlie, when competitors start proliferating on the international scene. And suddenly you don't have the same guardrails or rather permissioned nature for these LLMs, and people start using Chinese models. Also is curious, like, how will the US government react to that? But
yeah, I mean, I would probably imagine that, similar to how local pushback is giving data center build outs a lot of trouble that was unforeseen 6 months, 12 months ago. I wouldn't be surprised if geopolitical dynamics of inference and training and national security play into it. I also think that this probably becomes similar to how we develop relationships with allies for manufacturing of weapons, where we have to include not just tank batteries and tanks that are manufactured by our Western partners, but rather now intelligence, which is run and determined. Okay, enough about that. I think we go to Keel. Keel's got a new CEO. We'll cover this story after a word from our sponsor, Lygos.
Bitcoin is back above 60K, but hedge funds and lending desks could still be under pressure from falling from the all-time high of 120,000. If you are using a Bitcoin-backed lender, do yourself a favor. Do not become the next FTX or Celsius victim. Instead, check out Lygos Finance. They are our preferred Bitcoin-backed lender here at Blockspace. They use Bitcoin native smart contracts to make sure that you are always in control of your Bitcoin and nobody else. That's right. With Lygos and its Bitcoin native smart contracts, you always hold the keys to the Bitcoin that you are lending out through their service. Check out Lygos Finance for competitive rates as low as 8.5 to 10% APR. Go to lygos.finance to learn more. All right, Charlie, final story of today. Keel Infrastructure appointing a new president. One Ganesh Aiyer has taken the helm as Keel's president as of Monday, and he comes with a rich background in almost every vertical you could want in a data center operator. He joins Keel from his most recent post as Chief Business Officer of Digital Realty Trust, which is one of the largest data center real estate investment trusts. And he also held roles at Dell as a VP of sales and a VP of revenue operations at Schneider Electric. So he's touched both the real estate side of things for data centers. He's also touched on the compute and infrastructure side of things with Dell and Schneider Electric. And I can't help but look at this, Charlie, as Keel saying that they are really hunkering down on searching for leases for their data centers in Pennsylvania and Washington. And they've yet to sign a tenant at any of these sites. I don't know if Aiyer was brought on to firm up any leads that they currently have, or if they realized that with their in-house capabilities, they needed something more to really get some deals over the finish line. But this is coming amid a 2.2 gigawatt push for its data centers in terms of figuring out who's going to actually live in those data centers for these AI workloads. And also, most recently, they secured zoning approvals for their Panther Creek and Sharon sites in Pennsylvania and the Moses Lake site in Washington, which they listed as 2026 priorities. Charlie, your take on the news.
This is a hire, it sounds like, to get them a deal secured. If I'm not mistaken, CEO Ben Gagnon stated that their 2026 priority is to sign 3 leases by year end. I believe they currently have 0. Gagnon said that he talked to, quote, 129 investors since Q1. So if I didn't have leases signed and I needed someone to do it, it sounds like I would hire this guy Ganesh. His pedigree is kind of a who's who of I believe, chief business officer of one of the largest data center registered real estate investment trusts. So, yeah, more power to him. I do wonder if Ganesh is going to adopt similar public branding as Ben, who's one of my favorites. I got to show it here. Ben, Captain Keel. So does that make Ganesh Admiral Keel, or he's just another captain?
First mate Keel.
First mate Keel. We'll have to see. But it does sound like, yeah, this is the guy you'd hire to secure those deals.
And also with his work at Dell, someone who could probably be, who could steer the entire ship with these deployments in the sense of figuring out how to actually get a deal signed, but also figuring out on the other end of that, how to set up partners with OEMs, assuming they don't already have those pipelines built out. Sounds like he's really can understand a number of critical pillars in the entire stack here for getting a AI workload off the ground. And Keel is paying him well accordingly for that mission. His annual base salary is $500K with a target annual bonus equal to 100% of that salary and a one-time grant of 100,000 stock options plus RSUs valued at 1.5 million. I mean, if you're going to poach a guy from one of the largest data center real estate trusts in the US, you got to come ready with the cash. So congrats to the Keel team on the hire, and we will be keeping an eye out for those deals as we enter the second half of the year.
That is it for the show. Thank you for listening to Blockspace Live, going live at 1 p.m. Eastern every weekday. Thanks to Jay Patel for showing up, and thanks to our sponsor, CleanSpark, Nasdaq listed, ticker CLSK. Tomorrow's show, we have two guests booked, Frank Holmes and Connor Deacon of Project 11 to talk some quantum. Will be a very good show tomorrow. Make sure to tune in. Otherwise, I'm Charlie.
I'm Colin.
And we'll see you tomorrow.